Welcome back to the Hunter of Dividends YouTube channel. This is Kyle Hunter, aka the Hunter of Dividends. Let's dive into another dividend stock analysis here. For today, we're going to talk about Stanley Black Decker, ticker symbol SWK. Let's dive into this one, take a look at some of the research, see what we think based on the information that we have in front of us. So I'm going to pull up some of these charts, numbers. We'll see what is the best way to look at this one. And I look at this from a long-term standpoint as well. So let's say that before we get started here. So Stanley Black Decker has been out of favor here for a good while on Wall Street. You see here, this is some pretty good research here from Argus Research. This is a peer comparison table for industrial stocks. What you're going to see here is this is it up against other stocks such as Snap-on Tools, Graco, Toro, etc. From the chart here, you can see the only one with a 5-year EPS growth rate that's negative is Stanley Black Decker, and that's negative 16%. The others are growing pretty quickly. Net margin 6% here, 10% at Toro, 19% at Nordson, 21% at Snap-on. You can see that Stanley Black Decker has certainly had some issues here of late that have weighed it down quite a bit. It's understandable that this stock would have struggled, at least compared to these other ones, when you see that earnings-wise, it's really fallen off here of late. They've had some management issues that have not been great at Stanley Black Decker. We'll see. It's kind of a turnaround story at this point. We'll see if they can get things turned around. So let's take a look now at Simply Safe Dividends. I will pull up Simply Safe Dividends. I love Simply Safe Dividends. I think it's a really good tool to look at for dividend investors. So dividend yield currently 3.98% as I record this here on May 11th, 2023. Dividend safety score 80. Dividend growth 1.3% the last time around. Beta 1.21. So it is a bit of a high beta stock for a dividend stock. Obviously a large cap. I do own just a little bit of Stanley Black Decker, a very small position for me, down 8.2% on it thus far. You see that Simply Safe Dividends did downgrade this from 90 down to 80 here a few months ago. Basically, profit improvement, sustainable dividend coverage could take until late 2023 because they are struggling here recently. You look at the payout ratio too. This just shows how much their earnings have absolutely crashed, because you see it was 28%, then it goes to 69%, 158%. Just a wild ride here for Stanley Black Decker, not in a good way. Look at the earnings per share, which were consistently growing up to 1050, and now they've dipped to 462, estimated here to be 202 in the last 12 months, or the next 12 looking to be 232. The earnings per share growth, which just fell off a cliff here. Sales growth, not as terrible as earnings per share growth, but certainly not good. Return on equity, as you can imagine, has fallen apart as well. Return on invested capital the same way. Net debt to EBITDA is extremely high here. This is one of the warning signs for me. I hate to buy too much into a stock that has this much debt. Interest coverage just 2.80. So I do own this one, and I think that the price has accounted for quite a bit of their issues, but it's hard for me to get anxious to buy a ton into Stanley Black Decker based on their issues that they're having right now. 4% dividend yield is pretty good. I'm not just a dividend yield type of guy where I'm going to chase a high dividend yield. I'm looking more for dividend growth than I am for a high dividend, at least to start with. Certainly, I own a few of the higher dividend players, but I think Stanley Black Decker has quite a few questions to try to answer. Let's take a look here. I'm going to stop this, and then we'll look at fast graphs, which is another fantastic tool here. Fast graphs here, we look at Stanley Black Decker. This is adjusted operating earnings going back to 2004. You see the black line is where the stock has been trading. It's really hard to evaluate give it a good fair valuation on Stanley Black Decker right now because the earnings have just fallen apart. The big question mark here is what's going to happen with future earnings at Stanley Black Decker. If you know that, that's kind of the $1 million question right now. It's going to bounce back up into a range that it was in before. Then the stock is cheap. If you think it's going to be a long, slow road back, then maybe this isn't that great of a price after all. But let's look at sales here, which is a little bit smoother. If you look at sales from a price to sales standpoint, it does appear cheap right now at a 0.73 blended price to sales. Sales, as I showed you before on Simply Safe Dividend, haven't fallen apart as much as the operating earnings. They had several issues here at Stanley Black Decker. They're still going to get plenty of sales. This is a big name. Everybody knows that. I do think that some of the other people in the industry have been taking market share from them, and they are liable to keep taking market share from them in the near future. Let's look at cash flow here, operating cash flow, where you see, again, it craters here in 2022. Let's look at forecasts here. This is a forecasting calculator. This one, as I said, it's really wild, bumpy ride because you just don't know what to expect for the future. If you look at normal multiples for Stanley Black Decker from the last 20 years, this appears to be surefire buy at SWK because it's just trading so much cheaper than it usually has. But the picture here is different than it was during a lot of that time. So that's the $1 million question, as I said. Rate of return here, if you look at adjusted operating earnings and forecast it out to a normal multiple, would be 22% rate of return through the end of 2025. Now, certainly, I'd be excited by that. I think anybody would be excited to lock in at 22%. But this is a pretty big guess as far as what operating earnings will look like here in future years. So for me, Stanley Black Decker, one where I own a small position in this. I'm going to keep my position pretty small right now. I just think there are enough question marks here that, there are question marks that make me want to see the turnaround some before I just go buying a bunch of this stock. I think that, 4% yield's nice. I think some of the other names in this space, Snap-on Tools, for example, I do like Snap-on better than I like Stanley Black Decker. As far as the company, of course, the price, not as cheap. Everybody knows that Snap-on has been doing better. If I were to pick one of the two, I would still pick SNA over SWK. But if you're one of those people that's trying to find a turnaround story, then maybe SWK could be the right type of stock for you. I think that this is one where I'm going to keep an eye on SWK. I'm going to keep this as a smaller position for me. I think at $80 a share or so, not quite cheap enough for me to be excited to buy in more. If this dropped to about 70 or upper 60s, I would buy more into SWK. But I think this is a long-term rebound story. It's not going to be really quick. So that's what SWK looks like from my standpoint. If you like this video, certainly give it a thumbs up. I appreciate everybody who tunes in. Subscribe to the channel as well. Again, this was a reader request for SWK and analysis on it. If you have any suggestions of stocks that you want me to cover, drop them in the comments below. Send me a message at Hunt Dividends on Twitter. Happy to do any of those. Always happy to connect with anybody from financial Twitter, dividend Twitter, YouTube, from any of the spaces. Appreciate everybody. I hope you have a great rest of your week, and we'll see you next time.